Hello all, welcome back to our channel. So students, in this video we will discuss the unit 5 explanation of economics for managers. So that is macroeconomics and budgeting. So this is the smallest chapter and less topics you are having compared to the remaining units. Definitely you will attempt all questions from unit number 5. Okay, only three topics is there. The first topic you are having about the national income, and second topic you are having the inflation. So these are the two main topics which you are having in unit number 5. So definite questions and repeated questions is there, so don't skip the video and watch till the end. Okay, so the first important question is, what is national income and what are the concepts used in national income accounting? So first you need to understand what is national income. So it is the money value of all finished goods and services which are produced in an economy during a specified period of time. So in a specific period of time, whatever the finished goods and services are produced in an economy, see, in 1 year of time duration, how many goods we have produced in our country. Okay, so it refers to the total national output in 1 year. How many goods you have produced, how much output you have got, that is called national income. So it is implemented in the three ways. It is like total receipts, total expenditure, and its result out of the fact will expenditure. So whatever the growth is there, whatever the production you have done, whatever the output you have got, based on that, whether you are how much expenditure you have done on it, how much income you have received on it, there are various calculations, there are various concepts which you can use to calculate the national income. So the first concept you are having GDP, that is gross domestic product. So this gross domestic product is nothing about the whatever the total goods and services are produced in an economy within a period of time. In other words, the final products which is produced annually in a country, that is called GDP, gross domestic product. So GDP formula is equal to GRO plus EX minus M. GRO is nothing but gross retained output, EX is equal to exports market. So you have produced 1,000 goods, you have sold 1,000 goods also. So how much price you are having, how much exports you have done. Exports is nothing but we are exporting our goods to another country. When we are exporting our goods to another country, or automatically our national income will increase. It depends on the market price and exports, whatever you have done, that will be required to your gross domestic product. This is one of the concept which is mainly used to calculate the national income. Second one, you are having GNP, gross national product. So gross national product is nothing about the whatever the goods and services are there in which is produced in a country during a specific period of time. Means mostly they will use only 1 year product. Means a product is produced in our country and sold in our country only. That is called gross national product. What is the formula? GNP, gross national product, is equal to GDP plus NFIA. Means produced and sold in our country only, that is called gross national product. So next one you are having NNP, net income or net national product. So it is a factor where prices are fixed. Means for example, whatever the prices are there for the deducting in the taxes and adding subsidies in a marketplace, that is called net national product. Means whatever the sales you have done, in that you need to pay for the tax also. No, after that, what is the final thing you have got? This is also one of the main method in the calculation of national income. Next one you are having net national product or net national product or net national product at market prices. So it is defined as, what is defined means whatever the services and goods are there, whatever the price they actually paid for them. For example, you have sold it for the 100 rupees, sometimes you have sold it for that for 50 rupees also, means how much you have sold for it, that is called net national product at market price. What is will be the market price? So this is the formula. Simple thing ma, remember the concept names along with the formulas and you can write it. Private income is nothing about the whatever the income is earning in a sector of in a country, private organization, okay, earning from the organization, every individual whatever is earning from the organization, that is the private income. Okay, next, personal income. Personal income is nothing about the whatever the individuals of a nations are receiving as a source of income, like for example salaries or any type of things which they are receiving their income, that is called personal income. Next, disposable income. Disposable income where people will get actually to spend it, so that is called disposable income. And per capita income. Per capita income is nothing about this specific period of time, whatever the income of individuals is that is called per capita income. What is the formula of per capita income? National income by population of the year. So next, most important concept again they have asked about the concept we have already discussed, and methods to measure national income. What are the main methods we are having it? So there are three methods ma. Production method, income method and expenditure method. In production method, to calculate the national income, so the production method is also known as net product method. In this national income whatever you are having, it is staged into three categories. So first category is measuring the domestic output and domestic product, estimating the cost of production, obtaining net value. Means what it will do means, first measuring the gross value of a domestic output. So how many goods were sold from our country to another country domestically. So that is the thing you need to do in the first one. Estimating the cost of, to produce that many production, how much cost you have done, that is the second one. Third one, you are having obtaining net value of domestic output. What is the net value of your getting, that is the main thing you are having in this. Okay, so that you can increase your deduction of the gross value and over the thing you can easily understand it. Okay, next one, you are having income method. Income method or factor share method is also known as factor share method. So in this, whatever the income is there, to be equally increased income. So whatever the rent is there, for example national income is equal to rent plus wages plus interest plus profit plus depreciation. So this is the formula of the things, no, whatever the factors of production is there. Okay, so on them rent, wages and profits are respectively, means it is maintained in a separate payment or a description manner, so that it will increase your one of the method to calculate your, to measure your national income. So second is the income method. So it depends on the various things, labor, capital, etc. And third one, you are having expenditure also, no. So expenditure means whatever the cost you have got, that is the thing. Next one, you are having national theory is the one of the most important thing ma, don't skip that thing. Next important is inflation, causes, types and inflation. What are the causes and types of the inflation? So these are the two questions which you are having in the thing. Fiscal policy, these are all not required. Now we will discuss the what is inflation and what are the causes of and types of inflation. Inflation is nothing about the rise in general level of prices. Means for example, if you have seen past 10 decades, the value of one product is less. Right now the value of product will increases. Means price value will increases over a long period of time, that is called inflation. Okay, so when prices rise, automatically there will be a decrease in purchasing power. When prices is more compared to in previous 10 years back, this pen cost only 3 rupees, now it is 5 rupees. The inflation has been increased, so land value will also increase. That means inflation, money value will also increase. Like what are the reasons for increasing that inflation? Means first one, deficit financing you are having. Deficit budget is nothing about the whatever the expenses you are having, that is called deficit. Okay, so the countries like India will suffer from inflation because of deficit financing policy. Means for example, we are having so much expenses like minus values we are having, that is called deficit. Deficit in financing we are having. And next important thing is black money. With the help of black money we can have the inflation also. And excess supply of money. Excess supply of money is increases with the rise of a thing. Means it will have the direct link with the inflation and increase in population. When increase in population, automatically inflation will also increase. Whatever the investments is there, when you are increasing, that is also one of the main reasons. Natural calamities like earthquake, tsunamis or floods, anything, it will happen, automatically increase, inflation will increase. So that there are various things like around 10 to 12 you are having. So in that 10 to 12 into examination, you need to write only 5 to 6. It will be more than enough. Okay, so 5 to 6 points, you try to remember it and try to write it. Okay, next and the last type of inflation is there. In types of inflation is divided into mostly 5 types, according to the scope, according to the rate, according to the reaction, according to the nature of time period of occurrence, and according to the causes. So this type of flow chart you need to understand, you need to remember it. Okay, so these are the points you are having. So in this thing, whatever the different types are there, you need to explain it. Okay, inside the points, if you want to explain, you can, or else you cannot explain also, no problem in it, but you need to mention the how many types you are having in the inflation, because this is also one of the main important question whatever you are having in your 5th unit. Okay, so in examination you will not have that much time to elaborate all the thing. Okay, so in the first type of inflation, according to the scope, you are having comprehensive inflation. Comprehensive inflation is nothing about the when you increase the price or a price of a good or a commodity, automatically economic wise inflation will occur. Next is sporadic inflation. Sporadic inflation is nothing about the certain group of products, whatever goods you are having, if price of increasing of that will be there, means due to shortage of supply, means these products are not existing in the country, that time whatever we will do, we will increase the prices of that particular product. Next one, you are having moderate inflation. Moderate inflation is nothing about the whatever the 10% less than annual moderate inflation is there, that is called moderate inflation. Running inflation, galloping inflation, hyperinflation, the different types is there. Not much required in your examination, just to try to draw the flow chart and try to explain any 5 to 6 points is more than enough. Okay, so this is all about the video. I hope that you have got clarity. If you are having any further doubts, let me know in the comment section. All the very best for examination and preparation. See you all in next video. Bye bye everyone.